Hi, I'm Julie Cooling, founder and CEO of RIA Channel. I'm here today with Brian Kraus, Senior Vice President of Systematic ETFs for Hartford Funds. Brian, thanks so much for being with me
Thanks
today.
for having me, Julie.
So tell us a little bit about the systematic ETFs at Hartford.
Yeah, so we've got a number of ETFs that kind of span the globe. All of them kind of operate under the same principle. It's this interplay between risk management and trying to enhance returns. So on the risk management front, we try to have more diversification in our ETFs than an investor could get maybe in kind of traditional passive cap-weighted ETFs. And then on the return enhancing front, we try to use factors like small size, value, quality, and momentum to try to enhance returns.
So how many ETFs are in your lineup?
In total, 6 today, with a plan to expand the lineup pretty significantly over the coming years.
And how much under management on the ETFs?
A little over $4 billion.
Okay, fantastic.
Yeah.
Can you tell us a little bit about the history of how Hartford got into that side of the business?
Sure. So it was back in 2016. Us at Hartford Funds, we were going through a build versus buy exercise. We wanted to be in the ETF business, but had to decide whether to build it ourselves or go about it through an acquisition. And ultimately, we were introduced to Lattice Strategies in San Francisco, run by Ted Lucas. Made the decision to acquire Lattice. So the funds that Lattice had been managing became Hartford Funds ETFs. Ted and his team, who are with us today, are Hartford Funds employees, and now we're kind of one big happy ETF family.
Fantastic. So I know they're rules-based, but some advisors may not be as familiar with systematic ETFs and how they operate. Can you talk a little bit about that?
Sure, yeah. So I talked a little bit before about the interplay between risk management and return enhancement. And so at the kind of forefront of the operating cycle for our ETFs, we put rules in place to say, hey, we want this ETF to be, say, more diversified than the S&P 500, as an example, because we think that that's really good for long-term investors. It leads to good outcomes. It doesn't put all of our eggs into one or two baskets in the U.S. equity market. And then on the kind of return enhancing side, we say, over long periods of time, we think that investors can benefit from good investment outcomes that are attached to having a value emphasis, a high quality emphasis, maybe a little bit smaller than the market. Again, kind of something like the S&P 500 as a comparison. So we put these rules in place to say we want to buy a whole lot of stocks, create a very diversified portfolio, but at the end of the day, the characteristics of the ETF need to be very high in value, very high in quality, some momentum, and smaller than the overall market. And so, it's really interesting having client conversations because people talk about returns and risk, and obviously you want to avoid trying to kind of promise returns, but I think what we can promise is very consistent exposures to some of those factors that I talked about, like having higher quality, higher value, and good momentum, when compared to some other strategies out there.
And are advisors using these ETFs as a complement to their core ETFs, or are these core strategies?
Yeah, I think in general, these are core strategies. I think they're, they have really attractive price points. We've never paid capital gains distributions. Like I said, they've got very predictable exposure, so they kind of have all the makeups of what you would look for in a core strategy within a diversified multi-asset portfolio, and it gives allocators the opportunity to then put their thumbprint on the rest of the portfolio by maybe emphasizing different strategies, active and passive, that may be really attractive from a kind of tactical perspective. But I think in large part, the advisors and portfolio allocators tend to look at our ETFs as core holdings.
Fantastic. Well, Brian, thank you so much for being with me today.
Thank you for having me, Julie.